So if I was looking at houses today and I want to come in and talk to you, what am I looking at?
So for a single family home, for a first time home buyer, the market typically starts here in at least the western communities. Let's start with the western community. Oh, we can do Palm Beach in general, actually. So if you do Palm Beach County in general, the entry point is around 400. There are properties below that, but that's kind of recognized as a general entry point. If you're below 400 for a single family home, it's either probably going to need some work of some sort. It's going to be very small. We have a lot of homes in Palm Beach County that are 1,000 square feet or below, and they're still in that upper ranges of the 300s, into the 400s. I have something I'm going out with today. We're going to look at and we've looked at, I would say probably a couple dozen homes. She's been looking for a while, and she is on that kind of cusp of affordability. She really wants to wait until she gets into a single family. So it's going to take the right set of circumstances. But in general terms, in Palm Beach County, anyways, you're looking at that range. Really, if you're at your age, a millennial age, unless you're tied to Palm Beach County, St. Lucie County still has a lot of opportunity. There's homes in that maybe closer to the 350 range. And honestly, I'll tell you what, right now, even here in Palm Beach County, but although there's not much new construction here, some of the new construction, the incentives they have are making the value proposition change a little bit, because if you can get 4.5% financing from a builder, that dramatically changes your affordability ratio, right? So there's some stuff out there that kind of doesn't fit that right around 400, but in general terms, that's what you're looking at. That's the entry level for the county in general. As you get out west here, it goes up a little bit. But I was actually on a national call with one of my coaches. It was like a mastermind, and I'm listening to this guy in Albuquerque saying that their entry level is around 400 as well. Whereas back the last time I was spent a lot of time in Arizona was actually, or at least that part was much cheaper than Florida, and now it's starting to become on par. And then there's a lot of the more northern agents saying that their first time home buyer, their entry level on single families is in like the 600s. So everything's relative, I guess, but that in general terms for a single family is what you'd be looking at. You can get around that a little bit if it's something that's in an HOA, but typically if the price is down below that, it's because the HOA is pretty high, right? So if you're paying a $450 HOA, but you can get in under, then that changes your affordability matrix quite a bit. So single family, let's say in either a no HOA or low HOA is what we're referring to. So.
Now, when I'm on the internet and I'm, on forums and reading things, a lot of people are saying that they can't afford a house even if they're making a certain amount for the year because of down payment. So when it comes to somebody who's looking to buy but doesn't have a down payment, would that be a PMI? Like, how would that work?
Well, so down payment, PMI. So let's take it all as sort of a whole. You need to have a certain amount of money in your hand to even think about buying. That's just the facts of life, right? Are there things that make that number very malleable, and are there things that can help with that? Absolutely. The first thing is finding the right lender. I have lenders that I work with. Several of my top lenders right now, they either have $6,500 or $5,500 first-time homebuyer grants. They're just giving you the money, right? That means that if you're a first-time home buyer, which the description of first-time home buyer, by the way, is somebody that has not owned a primary residence in over 3 years. So it's not necessarily that you've never owned a home. It just means that you haven't owned one in the last 3 years. But these are grant programs. It's not even a loan. They're just giving you the money. Some of them have grant programs where it's it's a loan, but it's a 0% loan that drops onto the back of your mortgage, meaning it's the last thing that you have to pay. We have here in Florida, we have Hometown Heroes, which just was recharged with $100 million that has eligibility up to $35,000 for purchase on that kind of a loan, in addition to the grant, right? And really, as far as I know, they've relaxed the program so much that the only eligibility requirements are that you work for a company that has brick and mortar here in Florida. So there's a ton of programs out there that can help that. And most of these programs are based on that very thing. They're there to help you with the upfront costs. That up to $35,000 can be used towards upfront costs. All right. So that's a very helpful way to work with that. There's in the negotiation of purchasing, there's times when we can get credits from the seller that you can use towards your upfront costs. So there's a lot of ways to take a relatively modest upfront cash basis and turn it into a workable solution. But again, you're going to have a reasonable amount of money in your hand to purchase, but you also have to have a reasonable amount of money in the bank after you purchase, because just because you finally bought the house doesn't mean the other bills go away, right? And there could be small things that come up. When I say small things, I'm talking things that might cost $500 to $1,000. Isn't necessarily small, but in the grand scale of things, it is. So you don't want to be pocket poor, right? You want to make sure that you have money in your pocket and you have some savings, right? Some reserve before you decide to purchase. But there are ways to make, like I said, a smaller amount of money in your hand go a long way. Now, as far as the PMI, so PMI is an additional insurance that is charged by lenders if you don't have at least 20% equity in the home, okay? And a lot of times that 20% equity is the equity that you take out of your pocket and you put into the home, meaning that you have 20% down to purchase. Some of those PMI programs are there for the lifetime of the loan. Some of those PMI programs are there until you meet that 20% equity, right? So there's different ways that you can work that. But the 20% model, honestly, is used to be most people would wait until they had the 20%, but most of the time now, I'd say 60 to 70% of the time, we have people that are either coming in like between 3 and 5%, whether it be with FHA or conventional. Both of those different loan types have their pluses and minuses. So if you're going to purchase, we need to get you with a lender that can explain to you all that stuff too. But again, there's ways that we can multiply what you have and sometimes get you literally free money that can help towards those upfront expenses. So I guess the best answer I have is if you're thinking about purchasing and you think you're ready, give me a call or give whatever your local realtor, call whoever you trust, and find out what your options are. That's part of what we're here for. We're here as a resource to you to help you, point you in the right direction for lenders and things like that, and let you know what programs may be out there. So that's what I would say.
Hey guys, thank you for tuning in to Living in South Florida Does Not Suck. Please do subscribe with the notification bell on. If you liked today's guest, you can also get more information about them right here. Like magic, it will appear. Anyways, we love having you here. We love having your friends here. Shout it out from the rooftops. Like us on Facebook. Share it with your friends. We'll see you soon here in beautiful, sunny South Florida.